What is up, you guys? Pete DiCarlo here with DiCarlo Capital, and today we're going to be going over Apple. Apple had great earnings last week. We are back up over $170, and I kind of want to go over where I see this thing going within the next couple of weeks, as well as the trade that we ended up having called out on our Discord. If you guys aren't already, go ahead and check out the Discord. The link is in the description, guys. It's completely free. You get access to free courses, free live streams, seminars, webinars, as well as a ton of other free content over there. We actually have a technical analysis bot that we pay $200 a month for so that you guys get access to it for free, so that you guys can use it to trade with your own dark pools, unusual flows, as well as heat maps. It's a $200 a month bot that you guys get for free. The link is in the description. And earlier within our technical analysis section, you can see Apple was flagging here on the 5-minute. This alert came through within the Discord at 11:49. And if we go back and look at how Apple was trading at that time, you can see a nice bull flag forming here, still holding within this range. And we did actually end up having a nice little breakout from there, but nothing too crazy. Came up, tapped 173. And since then, we really have not been able to get through 173 for the past, basically couple of hours. And I want to go over if I think that we're going to push back up into those all-time highs. This was the trade that we're looking for, from 172.50 up to 173.50 on that day trade, and then we have fallen back and sat through here. But looking at Apple, over the past week, I have been posting within the mentorship group that we do have a huge ascending wedge here, which technically tends to be bearish, but with absolutely amazing earnings, we did see one more big push up here on Apple. Great earnings. We went over them last week. But normally what happens on an ascending wedge is we have a resistance that slowly moves its way up, making higher highs, followed by a support that slowly makes its way up, making higher lows to one fixed point. And we tend to get a squeeze. I said this in the video that I recently made this morning on Microsoft, but it was on a much smaller time frame, that you have to think of this resistance as one finger, this support is the other finger. They are squeezing a pimple. All the pus forms in the head of the pimple, and then it explodes. Now, normally on an ascending wedge, it explodes to the downside. On a descending wedge, which means it's going down, on a day trade that we took earlier on Microsoft, you see this descending wedge, it usually explodes up. Now, we did end up looking like we were going to snap 158, but they had great earnings, push back up. And to be quite honest, we still might end up taking a fade, but the apex or the head of this wedge is actually earnings next quarter. So you can see the head of this is actually formulating here around April 25th. Now, I'm not going against Apple. I'm not going against the market. I'm just throwing it out there that we do have this pattern happening. You guys probably know by now, I don't ever really go against the market, because the market goes up 99% of the time, and usually the times that it doesn't go up over extended periods of time, a lot of people end up not being able to catch it anyway. So I'm not somebody who's trying to catch puts and then revert back into calls. Like, I normally don't do that. But one thing I want you to notice is this old little channel that we were trading before, this resistance here of 180, the support down here of 168, and we were trading between this for basically like almost a month, the end of November to basically the middle of January. And now we are dropped through this support. We are holding within this wedge once again, and now we are right back up. And this is a good sign. So a couple things to note here: very thin area on the volume profile from 160 to 170. That's how we were very easily able to gap up. But now we do have a big chunk of volume here. So personally, if I'm looking at trading Apple on a smaller time frame, like maybe trying to trade this for the next week or so, to be quite honest, I think that entering a position here is probably not your best bet. For me, what I would be doing is waiting to see if we pull back down to like 168, at least 170, and then attempting to enter around there, and then riding the trade back up to 181, which is about a 7% move. If you were to enter the position here, which is not the worst, honestly, it's really not, but if you were to enter the position here, and then we have a resistance at 180 or a take profit, and then you were to set your stop loss at a break of pattern, you have an RVR of 1, which means you're risking 4% to make 4%, which is not what we want. What we want to have is risking 1 to make 3. So that means that if we had a stop loss set here at 165, we want to be able to take profits at 180. And you see, if we move this around, now we have a 3.48% or 3.48 RVR, which means that if you enter down at 170, you take profits at 180, it's a 7% gain. And if you stop out at 165, you have a 2% loss. That for me is a lot better of a trade. So I hope this video helps, guys. Let me know any tickers you guys want me to do down below. As always, thank you for all of your support. Check out our Discord Discord. The link is in the description, guys. Completely free. And thank you for everything. Have a great day.